Hello, I'm Amanda Tickel, Head of Tax Policy at Deloitte. This is a budget full of business support measures, extending furlough, business rates relief, and £5 billion of VAT cuts for hospitality and tourism, as well as a raft of new grants, funding, economic zones, and super deductions. Only in two areas has the Chancellor begun the arduous task of balancing the books by raising taxes, and that's by freezing income tax thresholds and raising corporate tax. The Chancellor stuck to his manifesto commitment not to raise the rates of either VAT, national insurance, or income tax. But although income tax thresholds will rise again as planned for the next fiscal year, they will be frozen for 5 years until 2026. It was widely predicted the Chancellor would pursue corporate tax rate rises in this budget, but no one expected the sheer size of the rise from 19% to 25%. This steep overnight rise planned for 2 years' time will take many by surprise. Now, although the new headline rate of 25% is among the lowest in the G7, the effective tax rate business pays will be higher than others in the G7. Now, when businesses look at investing in Europe, they will compare the UK to European counterparts, and at 25%, the UK rate is exactly double that of the Irish rate. So it remains to be seen whether this could act as a deterrent to foreign investment choosing the UK in future. The new super deduction for business investment was another surprise, this time benefiting business and described as the biggest tax cut in history. It results in the UK being the most generous of all OECD countries for investment relief. Costed at £12 billion for the 2 years it runs from the 1st of April, it is sizable and could massively stimulate economic growth. That said, it takes effect in just a few weeks' time and does rely on business being able to accelerate investment plans now. Considering the tax measures and reliefs together, this budget shows the government is choosing to try to grow the UK economy at pace in the hope of balancing the fiscal books through organic tax take, rather than by introducing immediate tax raising measures which could risk stifling the post-pandemic recovery.